We've had huge news in the housing market drop as of late, and the timing couldn't be better. Mortgage rates have come down by 0.25% for the first time in a long time and are now at their lowest level in 10 months. This has happened strictly because of the economic data that's recently been released. We had the jobs report come out to start the month, which was just flat out not very good, and showed us that there's clearly a crack in the economy right now. Coupled with that, inflation has been fairly tame as of late. There was a lot of talk about how these tariffs were going to cause inflation to skyrocket. Unfortunately, indicators show us that that really hasn't been the case, and that sentiment is starting to dissipate. Now all the talk is revolving around potentially 2 to even 3 Fed rate cuts before the end of the year. Similar to last year in 2024 in Q3 and Q4, if you recall, we finished out the year the same way. Just last month, economists in the Fed were stating that we were going to be potentially looking at 1, if not any, Fed rate cuts for the remainder of 2025. So in a fairly short swing of time, things have seemed to change for the better. My personal observation is that there's been a massive impact to the housing industry in just a short period of time because affordability has been at its peak for some time now. So mortgage rates coming down by even 0.25% has created a whirlwind of activity amongst home buyers who now have thousands of dollars more in purchase power and are looking to capitalize on this advantageous time period where sellers are still contributing to their costs and offering concessions to cover their closing costs or do a rate buy down. Who knows once rates continue to come down if that's going to be the case. We saw an influx of new mortgage applications last week from both new buyers and homeowners seeking to ease the financial burden of their high rate, high payment mortgage loans. By refinancing, homeowners who have piled up credit card debt or have a growing balance of student loans, auto loans, and credit cards can use the equity in their home to pay off and consolidate this debt, saving hundreds, if not thousands, every single month. We just closed 2 deals last week and this week, guys, where homeowners were able to save $1,500 and $1,700 respectively every single month by dropping their rate and paying off and consolidating debt. My average home buying client has roughly $35,000 to $40,000 more in purchase power than they did to start the year back in January and February, where the rates were closer to 7% or higher. I'm riding this positive wave, guys, for as long as I can, because we're having more applications, more conversations, more positivity, and the market is starting to catch fire. And for August, that's pretty rare. If you're in the market to buy a house, contact me for a free consultation. I'll get you a pre-approval and even take it a step further and get you a power bid pre-approval where it's a manual underwriting pre-approval that's nearly as valuable as cash. And I'll close with this, guys. If you're actively in the market to buy but are submitting offers with a home sale contingency, stop. I can pre-approve you using our buy before sell program here at Origin Point and eliminate the need for your home sale contingency right away. Your very next offer will likely have a chance of being accepted. If refinancing your existing home loan and want a great rate and your lender to cover some of your costs, get in touch with me because I can make that happen.